Hi, my name's Shaun Bunn. I'm the Managing Director of Empire Metals. Empire is an emerging titanium player. It's a new discovery. It's a giant mineral system located in a Tier 1 location in Western Australia. It's currently got an exploration target that's approximately 26 to 32 billion tonnes of ore. So this represents the largest known discovery of a titanium deposit in the world. And we're very excited about this. It's coming into development pretty rapidly, and we're looking forward to being able to come back to the market with a development plan in the next few months.
Sure, good to see you. I know you're on the road. You're currently in London, but you've been in the US, and I think you're going to go back via Asia. So you seem to be getting a good response from telling the story.
Yeah, certainly. I think, look, this story resonates, I think, with the investment community now. They're starting to understand, again, having the world's largest system of, full of titanium, having the location being one of the world's best places to build a large mine, and put the backdrop now with the emerging political importance of these critical materials. Titanium is a critical metal. It's used in defense industries. It's used for aerospace. So lots of interest coming out of, for instance, the US, and obviously we're also looking to broaden our marketing appeal into Europe and into Southeast Asia.
Well, I see you've also recently listed on the OTC as well. That's going to back up that strategy, is it?
Yeah, very much so. That allows, obviously, our US investors to more easily, trade the stock. And I think that's going to be an important part of our, corporate development side. I think two things happened very recently. We brought on a new non-executive director, Phil Brummett. Phil's a big mining company man. He's worked with Freeport. He worked for Newmont Corp. So, he's based in Georgia in the US, mining engineer by profession. So great pickup, strengthens the board. Also, our investor relations manager is Arabella Burwell. Arabella's been working with us part-time for a while, but she's moved up to a more full-time basis. So, we've got the horsepower now, I think, Matthew, to get out there and keep the messaging going through the investment markets.
Everything moving well in terms of that kind of messaging into market, and obviously critical minerals, metal, as you say. Let's just, maybe for audience who don't know the story, I know you've been on a few times, but there's new people looking at this, every day. So let's look at the kind of resource definition, geological confidence here. So can we talk about the, when we can sort of start seeing some, JORC compliant mineral resource estimate, and, how you kind of drive confidence levels with the kind of targeting that you're going with?
Yeah, certainly. In 24, since the last year, we rapidly went through from discovery. We've now completed our 4th, 5th drilling programs coming up. We've drilled over 200 holes already into the ore body, over 40 kilometres strike. We've drilled as deep as 400 metres. Every hole of the 200 is in mineralisation. So it's an enormous, discovery. We obviously have to narrow that down for when we go in and infill the JORC compliant mineral resource. So that's the phase we're entering. We had a drill rig up on site in February, drilled 84 holes on a 100 by 100 metre grid. That is going to be expanded over the next few months to broaden that target area. And effectively what we can come back to in the market within the next few months is a compliant mineral resource estimate. It'll obviously be focused on a smaller, higher grade area. And it's, we're not going to try and get 30 billion tonnes of ore into a resource. That would be impractical at this point. But we're certainly targeting, something that would represent, an extensive mine life, and we would be thinking about moving quickly into, scoping studies ahead of a pilot plant and a feasibility study.
But have you got, in terms of that mineralisation across the project, have you got a sense of, where where you'd go first in terms of, are there kind of higher grade zones that would be a nice sort of, starter part of the project versus, trying to have this slightly more homogenous, uniform approach to how you go about doing the drilling?
Yeah, well, one of the things we announced last year, in about June, we had gone back and drilled out through what we call the in situ weathered cap. So the weathering zone on the ore body is a natural weathering due to just oxidation from the climate. It extends down in places to 60, maybe 80 metres below surface, which represents in itself an ore body that's probably 4 to 5 billion tonnes. So again, multiple generational mine life just sitting there at the surface. Now, this surface cap is friable. It's easy to dig. There's no drilling, no blasting. There's no overburden. There's no waste to remove, all waste to remove. So this represents a highly attractive mine target for us. And most of our research, most of our metallurgical testing now is focused on this surface cap.
I'm always interested. We've seen lots of companies change their business models to kind of show a sort of nearer term revenue opportunity. We're talking now and have in the past about the ability to do that, but at the same time, you can't sort of, when you do come to market with a resource, if it's not perceived as big enough, then people maybe, that's where they judge you. That's where the kind of stakes in the sand are planted, and you kind of get labeled as this kind of small player. But are you, with the drilling that you're going to be doing this year, will you be doing some step out? Will you be doing some deeper drilling to say, look, there is potential beyond whatever we come out with initially?
Yeah, certainly. I think one of the things that we're very much aware of is that having staked out our claim as being the largest titanium project in the world, you're quite right. Coming back to the market with a small resource, because that's an extent of your drilling, is possibly misleading and may not represent the true value of what we have. So stepping out is one way, obviously, of expanding that target before we come to the market. Certainly drilling deeper would also, give us a much bigger resource base to start with. But just strategically, I think what we have to demonstrate, more importantly than just resource, is a pathway to profit. I mean, what's the commercial value of this? So I don't want the world's largest, titanium project if it's not profitable. I want the most profitable titanium project, and that might actually represent, at least on day one, a slightly smaller, a smaller operational plan that scales up over time and we expand.
And that seems to be getting a reaction in the market place for your story and others with the same commercial attitude. So let's get into the kind of commercial component here with the project over the next, say, 3 to 5 years. So have you got a sense today, it might be a bit early, but have you got a sense today about what the intended end products would be, whether it be, pigment grade titanium or titanium sponge, etc.? Where are you heading?
Well, this is one of the extraordinary things about this discovery. Not only is it so large that it sort of puts itself as the outlier, but Mother Nature has already converted all these titanium minerals in the ground into titanium oxides. So yes, there's still minerals, they're still in the ground, but the weathering has produced a surface cap, this in situ cap that's full of rutile and anatase. Those are two very important titanium dioxide minerals. Now, where that takes us to is we can beneficiate that, we can upgrade the ore through a simple gravity or flotation stage. We then finding that this is quite an easy leaching process. So in other words, we can bring the titanium out of those concentrates and into a final product. So to answer that question directly, we're on the verge of making pigment grade titanium dioxide. So we're not making an intermediate product. We're not making a concentrate that we would ship offshore and get a fraction of the value. We're going straight to the high end of the market. Once we're there, technically demonstrating we can produce a titanium dioxide product, then the optionality to move into metal is straightforward. So all those are very important strategic decisions that we're now working our way through. But the beauty of what we've done and we announced this about 2 weeks ago now, was our very first test to produce a product delivered a TiO2 compound, if you like, that is 92% TiO2. The other 8%, which is semi-refined, by the way, this product hasn't been finished. It's not got any of the the nasty contaminants, no deleterious elements that would affect downstream processing. So no uranium, no thorium, no chromium, none of the heavy metals. That's not a function of how good a metallurgist we are. That's a function of the ore in the ground. Those elements don't exist in the ore body. So we have a unique advantage over the current industry who have to deal with those impurities and remove them. So in a nutshell, this, if you wanted to find the perfect ore source to go and change and disrupt the industry and be able to produce titanium at a lower cost and a higher quality, this is the ore body that you needed to find.
Right. Now, you've mentioned some of the market segments that you might be chasing down or might appeal here, which is the aeronautical defense or coatings, etc. But how do you need to kind of structure the company? Because you've kind of got the maybe vertical integration route, or you've kind of got, well, we're a feedstock supplier, and where your product ultimately ends up is not necessarily in your hands, and in the case of the latter. But again, it might be early days, but you got to have a sense of what you're building for. You mentioned, the recent hire to the board. So again, have you got ambition on vertical integration?
We do, but whether we go alone or whether we partner up is something that we can talk through as we progress. One of the key things is having made a product, and as I said, this announcement we made 2 weeks ago was a sort of semi-finished effort. We've had one go at this. We are in the process now of producing a greater quantity, refining it a little bit better. So within the next couple of months, it's our idea or our view that we'll be out there talking to the end users. Go straight to the very end users I'm talking about, the guys that make the metal, the guys that make the paints. We need to understand what it is that they are looking for. Companies like DuPont, big TiO2 consumer, spend hundreds and hundreds of millions of dollars a year on research to improve their processes. We need to tap into that from a feed source point of view, for instance, and say, we've got this. Does this fit your business model? And if not, what do we need to do to change our process steps at the very end to become part of your supply chain? And we'll take that approach not just with one big group, but with as many as we can. That's the pathway, I think, for us to find a strategic who will come and help us take the final step, the final value added once we get into a titanium compound.
Okay, so you may do it on your own. You may bring in a strategic, not just because the technical know-how, but the balance sheet as well. So, but you've got to work towards that. You've got to, with these conversations, you've got to understand maybe what those kind of critical control points might be, what the bottlenecks might be in the process between now and those conversations concluding to some sort of agreement. So can you talk us through the kind of end-to-end technical flow sheet for you from today to that point?
Yeah, so what we found very early in the processing techniques that we've applied is that the natural minerals in the surface, in the weathered cap, can be separated. So there are two dominant mineral types, if you like, apart from the titanium. So the titanium itself represents maybe 10% of what's in the ground. But two interesting things. One is the surface material, which is more softer clay type material, is mainly kaolinite. Now, kaolinite it's China clay. It's what people use and make China out of. Interesting enough, for the last 100 years or so, the kaolin industry have been removing titanium minerals out of their kaolin because it discolors the final product. So that technique, that conventional processing, is what we're now using to, for instance, to extract our titanium from the clays and the softer material. It's a conventional process, nothing new, nothing difficult. On the coarse side, on the heavier side, what we have is titanium and hematite. So the heavier minerals that go through the gravity stage, our, if you like, not contaminant, but the main mineral that we have to move out of the way, if you like, to get to the titanium, is hematite. I mean, that's pretty conventional sort of technology as well, and potentially another byproduct from the processing. So there's nothing difficult about the ore, there's nothing difficult about the minerals. As I said right up front, there's no heavy metals, there's no radionuclides. So really, once we get a concentrate and bring it out, we get a really pure product. And that flow sheet has been now tested at a bench scale level. We have sent the rigs up in February, as I mentioned. Part of that was to bring back 40 or 50 tons of sample, and that's now going to go through the laboratories, through the metallurgical sections. And we're going to be scaling up everything to make, tons of product in the next few months. That enables us to really pin down our partnerships, our strategic options.
Right. And so I think what you're suggesting is there's potential to go from bench to some sort of pilot, like increase scale. And so what are the things that, in terms of the technical risk, that you're assessing? You talk about the simplicity of it all, but these things are they're simple if you know what you're doing, right? So in terms of liberating the mineral, the grain size distribution, is that consistent across the deposit? What are the risks in terms of the flotation, the acid leaching? You said the impurity levels are really, really good. So, but going from bench through to pilot, that's where there's a step up in difficulty, right? So how do you mitigate that?
Possibly not, because one thing that we do know is that from our own experience in terms of gravity separation, is that it's very hard in some cases to build or to test equipment at a bench scale. So what we're doing is we're going to a commercial scale rig. This is 1 or 2 ton an hour is something that we can put through a large scale gravity circuit. The fact we got 40, 50 tons means we can run this for multiple times. Once we make a concentrate, then we can sort of do a lot of diagnostic work and play around with that in the laboratory for a bit longer. But the real importance, I think, right now is to de-risk the front end, to de-risk the mineral benefit, the first step of separation. And the reason I say that is we need to find a way to get the titanium dioxide mineral into the cleanest possible concentrate, because we want to then bring the acid and digest that. So the cleaner the concentrate, the less acid that you need to digest and make the titanium. That's the simple economics, that's the simple processing route that we're going to go down. But before I leave that thought, I just want to point out one really critical thing. 95% of the world's titanium comes from ilmenite. So the entire industry for 100 years is dominated by one mineral. It's never changed. It's an iron titanium dioxide mineral, right? So it's got iron in it. The iron consumes acid. So for every ton of ilmenite, you need, say, 2 tons of acid. For every ton of our titanium dioxide mineral that we've got, we only need 1 ton of acid. So we've already got a strategic advantage just because Mother Nature has already weathered the ore. It's as I said, it's just like, the work has been partially done for us by just the nature of the weathering.
So it's good now, but if you go from TiO2 at 90% versus 95%, that dramatically changes the addressable audience, and it dramatically changes the margins for you, and I guess differentiation from you and other people talking the same game. So is your preferred route to find a sort of tolling or refining partner because maybe a potential perception around capex, or is that again something that you can work to do yourselves because the upside is significant for you, and your job there will be to make sure everyone understands the significance of that upside, and therefore maybe ease the ability to kind of deal with the kind of capex component once you get there.
Yeah, I think all those things, can be treated as stages of our commercial development. So if you think about what we've already done with a simple conventional flow sheet, first time, first effort pops out a really nice product. That has inherent value. That's more valuable than rutile. That's more valuable. It's not a pigment at this point, but it's very close. And as I said, that can go into the metal on a manufacturing feedstock. It can go to the chloride feedstock. So we've got something that is already high value. What your question sort of points towards, if you like, is should we look at adding even more value? What's the operating and capital investment to take what we have and make it into metal, for instance? What's the value add? Well, metal trades for up to $10,000 a tonne, sometimes higher. We just need to do the numbers. I mean, the technology is available. The capital might be available through, for instance, federal government funding. We've seen that multiple times for critical, materials like titanium. The federal government of Australia has been writing very large checks to get these things into production. So we have obviously some work to do on understanding the value proposition for making an even better product. But right now, I think we've done an amazing job within only a very short period of time. To set, as I said, to set the, a benchmark in terms of making low-cost titanium products that can go straight to the industry at the moment.
Yeah, I mean, for 2025, and what are you prioritising in terms of before you kind of move through to kind of a feasibility study phase? You're going to need to prioritise some things. Is it going to be recovery rates? Is it purity levels? Is it impurity rejection? What should we as investors be looking at as you kind of start delivering some of these test work milestones during 2025?
Yeah, well, the two sides. One on, let's talk about the geology, or the exploration, if you like, or the geology of what's in the ground. So we're going to be working through, as we said, building up to a mineral resource estimate that is going to get attention from the industry, given its potential size and grade. That I expect to be able to do over the next few months as we continue to drill out some of the targets. From that, we then look into some mining studies. We can come back and show people that this is all free digging, no drill and blast, no overburden. So that really sets a very low cost front end. So I'm really looking forward to sort of establishing the mining, if you like, aspect of this. The processing side is basically back engineering now from the product. I mean, we've made the product. Now I need to work back down that process chain to say, okay, well, what techniques, what conditions can we apply to improve the economics, improve the recovery, improve the grade of the products, and basically build the better mousetrap. Come back to the market towards the end of the year with some economics, some estimates from the market, from the end users as to what value do they put on this product. Where does this premium TiO2 material sit in the supply chain? So all of that sort of falls into place. All that becomes fantastic feed, if you like. These are the inputs, the variables that we need to put into the studies that we will then come back and say, okay, well, here's the overall economic picture. Here's the valuation. This is what this is worth.
Right. Okay. Now, look, obviously, as you move through that, you'll kind of give us a better view on things like financing as well, so we'll talk about that another time. But other things kind of which have held up a lot of other projects kind of globally is around permitting. For something like this, you talk about the simplicity of all stages of this, but permitting is always a big one. What is the process for going through permitting and licensing for what you need to do as you deliver some of these things, whether it be the kind of bulk sampling or pilot testing?
Yeah, we're blessed, I think, from the fact that what we've found is an ore body that sits within an existing farming community. So this is a wheat belt. There's native vegetation, if you like. The flora has been largely disturbed by 100 years of wheat farming. It's privately owned land. It belongs to these farming families have been on the land for at least 4 generations. And that, by the way, means that there's no native title. There's no crown land within the area that we're looking for, and hence we don't have to deal with the native title issue. So we're working very closely with the farmers. We work very closely with the indigenous groups that are represented in that area. Make sure there's no heritage sort of or significant sites that they are concerned about. But again, it's pretty hard to find some sort of Aboriginal artefact in the middle of a wheat paddock that's been ploughed for the last 100 years. So, we are blessed, I think, in that sense. And that means when it comes to permitting, we can convert the exploration licenses that we hold, our right to explore, we can bring them into a mining permit, and we can reach compensation with the farmer if we disturb any of his paddocks. It's pretty straightforward. There's environmental and social studies part of that permitting. There's certainly other license agreements that have to be negotiated, but it's pretty straightforward in Australia. There's no, there's no fear of having, a backflip from the Australian or the West Australian government that they suddenly don't want to support a mining project, in this part of the world. It's
okay. So those sort of kind of baseline studies and permit applications seem, well, as you say, if it's private land, I guess it kind of shortens the timeline or perceived timeline for that. In terms of other things like preliminary mining studies, you're going to have to go through. It feels kind of quick, potentially quick to revenue, because the simplicity of it all and the fact that it's weathered, at surface. What is your expected timeline? All things being equal and everything going according to plan, to kind of a revenue point.
Difficult question to answer, and
but it's not 10 yet. What I want to know, and what all investors want to know, is most mining projects from discovery, and given how you discovered this, it's we're talking 19 years through to production, right? This isn't that.
No.
Right.
No,
so give me a range, or tell me what end of that scale we're at.
Look, I think it would be reasonable for us to be saying in 2026, the culmination of our piloting test work, our economic studies, would enable us to go out and negotiate with the farming community in terms of where do we want to build a mine and what that might look like and what that compensation might have to be to acquire part of a wheat farm, and at the same time running parallel with that, we'd be putting our applications through the mines department in Western Australia to get the mining license. So the mining permit, when it works on economics, environmental approvals through the state minister, all of that. I won't say it can be fast-tracked, but given the size, given the strategic importance of this project, now you get major project status pretty quickly. You get strategic mineral financing from the federal government. It compresses the development and the financing of the project shortens down to a few years, not 10 years. You really can get into and start looking at building, pouring, earthworks, pouring concrete, whatever, within a few years now of where we sit. I think those who would be familiar with the mining industry would go, well, that's really good. That's a fantastic result. Others who may not be as familiar with, what it takes to bring a major project into production might think, oh, well, I thought you could do that next week. Yeah.
I know what you're saying, but it's nice. Look, I think the companies that are getting rewarded are those that kind of got a nearer term revenue model. They're conscious that making money is important in mining. Something that's been, I think, long forgotten over the past few years. It seems when you look at the time from discovery through to production for most, it's gone from 12.3 years through to 19.6 years, says a bank study. And I think that's really important to recognize that companies that are getting rewarded are those companies. This seems to be at that end of the scale. So for you, I guess that's helpful. And if I look at your share price over the past, this year, the last 3 months, it's been quite positive. Let's finish up very quickly because I know you're in London. You've got a roadshow on there. When it comes to you sort of seeing a nice sort of 50-60% response in the stock in an environment like this, you're going to take that opportunity to maybe just kind of top up the balance sheet to kind of get you through this kind of quite busy 2025.
Well, look, we're really fortunate. We saw this, we saw an opportunity late last year. We did a £3 million fundraise in September, topped us right up. We had announced back then that we had £4.8 million in cash. We've done one drilling program and a little bit of test work over the last 3 months, so that's not been a big drawdown on that cash reserve. In fact, the drilling in February, because we used air core rigs, only came in at just under $300,000 Australian for the total program. I mean, £150,000. So what I'm saying is the runway's there. We don't need to go to the market at the moment. We don't need and don't foresee the need to do that in any time soon. We have already funded the next few drilling programs, so we can produce the resource, we can finish the scale-up test work, and I think that's a really powerful position for us to be in at the point in time. We've got lots of news flow. We announced last, I think, came out yesterday that we've seen other strategic investment now coming onto the share register. Big fund guy based out of Kuala Lumpur has just moved up to just over 3%. We're really pleased to see these bigger funds starting to recognise the value and buy on market. I mean, that's awesome. So I think we've got a lot of value add, a lot of value accretion to see before we decide we need to to raise further funds if we need to.